If you have a strategy and you feel like it works, but there's a missing piece that stops you from becoming profitable, or you just can't get over your psychological hurdles, this video is going to be for you. So in this video, I go over step by step how to actually read key levels. So imagine buyers step into the zone, you see buyers failing, and you know exactly when to sell. Now vice versa, when you see sellers coming into a zone and you see sellers failing, you know exactly where to buy. So in this video, I want you to take note, and I want you to go into 2026 trading with order flow, not anything else. Okay, traders, welcome back. So I'm just going to be going over Friday, the 6th of March. We're going to be going over a simple setup that I took, right? So about 410 on the day, and we're going to be going over how I find my key levels on the S&P 500 or ES futures. So this particular trade, I want every trader to understand that every trade that I take and every trade you take needs to have three basic pillars, right? So this is the series that I'm making. The series is simply for those who can trade or who want to trade a mechanical system, right? So the mechanical system, right, that I use, that I, trade with, I'm going to be going over this in quite some depth, right, is I choose a key level to trade from. Now, there's different ways I find key levels, and the most common question I get asked is, how do I find these key levels? So I'm going to be breaking down one way that I do that in this video. But a key level comes down to two things. You want a fair value gap, and you want some kind of absorption, right? That confirms the key level. Now, the second thing I look for is an entry, right? And when it comes to entry, I look at the PO3 with buyers and sellers, right? And the last thing I look for is a confirmation, right? Confirmation is very important. So a confirmation is not what looks good at the time. Confirmation is basically order flow, right? Who is in control of the price? And so these are the three steps that we are going to keep coming back to throughout this entire video. Now, so if we just take this here, we're going to keep it on our screen, and we're going to quickly break down what was going on. So kind of step one is our key level. So on Friday, if we go to my Discord chat, on Friday, we had something like this, right? So I'm just going to keep going up. Friday, we had something like this. So let's just take a look at this chart over here. So what we had a fair value gap from Tuesday. Right, so we had Tuesday's low of the week. That formed down here. So let's mark this up. This was Tuesday's low of the week, and we happened to break a 15-minute structural low down here. So we broke a 15-minute structural low, and now we're below the weekly opening price. So we had this fair value gap here, big fair value gap, all the way here. So Friday, we saw that getting filled, right? So notice how throughout the week, Monday, Tuesday, Wednesday, we create the high of the week, or Tuesday or Thursday, sorry, and then we melted down, right? So Friday is typically when those lows of the week have already formed, right? So that was the trade I took in the AM session in New York, right? So let's quickly break that down one more time. So this is a 15-minute FVG. And so the main reason I chose this as my key level, just like this, right? So I chose the candle before the fair value gap. This is my key level where I want to trade from. So this is step one, right? So that is step one. So we've got our key level. Now, when we go down and when we tap into the zone like this, right? So the trade itself, it was not very good price action. Holding through this was not very good, but I managed to catch a 1-to-1 risk to reward in the process. So now when we come into the zone, right? When the market opens, right? 9:30 to 9:45, we are waiting. Right? We are waiting. So the first 15 minutes does not mean anything, right? The first 15 minutes is like the market marinating. Right, you want to understand what the market's doing from 9:30 to 9:45 Eastern. So for those who trade the opening range breakout, I want you to understand that your opening range breakout is only as good as the area that you use it from. Right, I'm going to repeat that. Your opening range breakout is only as good as the area that you trade from. So if you don't have a level, or you're not trading with some kind of a weekly candle bias or some kind of absorption, you're wasting your time. So if we just take a look now, we just want to kind of understand where we are. So if we just take a look structurally, for example, let's just zoom out and take a look structurally, right? So this is our structural high up here, and this is our structural low down here, just like this. So what we can see here is if this is our 50% level, this is a discount. And so we want to be buying in discount, right? From this key level, right, up to 1, 2, or 3. That was the basic theory. So notice how I'm not just blindly trading opening range breakout. I see a lot of traders doing that, right? The opening range breakout needs to have some kind of rules or criteria. So the first thing is we're in discount. Now, the second thing you want to look for is this, right? So we've tapped into our key level, right? Now we've come into our key level. What we are looking for is this, right? This is the weekly candle. Now, for those who don't understand how a weekly candle forms, I'm just going to give you a quick lesson on this. So the weekly candle forms something like this, right? So the market will open. This is the weekly opening price, right? The market will head higher, create the high of the week, right? Just like it's done here, create the high of the week. And then we will, of course, crash. So these lows of the week are typically made by Friday. So on Friday, if we're below this weekly opening price like we are here, we want to see some kind of a retracement back to the weekly opening price, right? That's typical. So if you go back and back test, what you'll find is the lows of the week are typically made by Tuesday/Wednesday. So on Friday, we are trading back up to the weekly opening price. This is how the market works, right? 9 times out of 10, this is how a week actually forms. So if you can just understand this one basic concept, I want you to treat the weekly opening price like it's a magnet, right? This is a magnet. And so the reason we want to treat it as a magnet is because the market will gravitate towards the weekly opening price. And so we can use this both ways. So for example, we had a key level here, for example, key level 4, I won't kind of break down how I got this, but key level 4 is a key level. And so we saw shorts down to the weekly opening price. And on Friday, we saw longs back up to the weekly opening price. So always have the weekly opening price on your charts, or at least in your mind, right? It's acting as a magnet. We want to be trading towards this weekly opening price. The weekly opening price is probably the most important tool I have other than order flow, which isn't obviously on this chart. But when we're looking at this again from a technical analysis perspective, let's go down to the 1 minute time frame. So on the 1 minute time frame, what we have over here, we have our levels. And so we have, let's call this 1, which is the main level of today, 2, 3, and then 4. So now that we're here, we understand we're below the weekly opening price, right? We've tapped into a bullish fair value gap, and now we are analyzing the first 15 minutes, right? We want to see a couple of things, right? So yes, we've tagged into a key level. That's very good. We've tagged into a key level, right? The second thing we're looking for is an entry. Now, we're not looking for any old entry. We want to see an entry that aligns with the following criteria. Are we below the weekly opening price? Because we're looking for potential longs, right? Are we below the weekly opening price? Do we see seller absorption? Right, absorption is the next thing. So we're gonna discuss what absorption is, and then the final thing we look for is confirmation. So confirmation also has absorption, but we're looking for a break and retest with, as how some people call it, the 15-minute breakout or the 15-minute orb. This is the direction that we're going in. Now, let's kind of just break this down again, right? So here's our levels. Now we want to try and understand what was going on in these levels, right? So I screenshot these in real time in the Discord. So let's break this down one more time, right? So here we are. So this is now 10 a.m. Eastern. Look at this, right? So yes, we've had a slight break below this 15-minute range, but you want to understand what was going on here and what was going on here. Understanding the price action just beyond the candles will take you from inconsistent to consistent, because you're no longer relying on sweeps and wicks and God knows what. You're relying on the actual data. So the execution I took for that day was around here, right? So that execution was 67.50, right? That was the execution for the day. So we just want to break down how I got that, but more importantly, what was going on inside of that key level, right? So what was going on specifically here, right? So if we just take a look again at this screen, what we can see here again is this chart over here. So this is the ATAS platform, right? This is the ATAS platform. And so the ATAS platform represents what we see over here in price. So let's break this down. So what we're seeing over here is, there we go. So now, if we have a key level, assuming you have the right key level, if we see a break above the key level, right, and especially above the 15-minute high. So we have the 15-minute high, right, and we have the 15-minute low. So the question is, we've already had a break down here. So this is where trading intuition as well as choosing the right level comes from. So what we can see again, we have our 15-minute high and low, and we've tapped into a key level. The question now becomes, right, if we break above the 15-minute high, like we have over here, and we break above the level, right, we want to see who is in control. So more specifically, what was going on here, what was going on here. So this is where the ATAS platform becomes quite important. So let's break this one down. So this candle here, let's break down this, right? What does this candle represent? So this candle is the same as if I just bring these next to each other, so if we just take, a look at this candle here, so this candle is the same as this candle, right? Here we go. There we go. What was going on in this candle specifically, right? This is what's so interesting. This candle is the same as this candle. So yes, it's a bullish candle, right? Yes, we can all see it's a bullish candle. You don't need to have 10 years of experience to know that this is a bullish candle, right? Notice how we've swept the 50-minute low, right? We've swept the 50-minute low. Even here, we've basically almost swept the 50-minute low. What was going on in this candle over here, right? Or what do you need to know about this candle, right? What in this candle gives you confirmation, right, to go long? So considering we have our key level over here, what we saw was a massive amount of red delta. Right, so I've been over this in previous videos, so I'm going to do it a little bit quicker this time. We see a massive amount of red delta, and so that red delta is represented over here. So for those who don't understand what red delta is, I'm going to break this down and make it very, very simple. Right, so what we understand with basically the way candles form is that we have the bid over here and we have the ask, which is over here. We have the bid, we have the ask. So in this case, when we have red delta, what's going on here is that the bid is actually a lot greater than the ask. And so what this represents is that there are more aggressive sellers than buyers. Right, there are more aggressive sellers than buyers, right? And this is represented simply with the red delta. So notice how we didn't even close below the zone. We kind of broke above the zone, and on second occasions over here, we barely broke below the zone here and also here. And we can see that on 2 occasions, right? So here and here, it represents the same sort of thing. So what was going on here? So this was now 9:47, and this was now 9:59. So it's about a 12-minute slug, right? So all that was happening here is that there were more aggressive sellers, but no reward. So what do I mean by no reward? Because I had a question about this in the comments, right? No reward. So think about it logically, right? I want you to look at the markets logically. If you're buying and selling, you want to be looking at the buyers and sellers, right? Super logical. And so when you look at this image over here, let's just bring this a little bit here. So if you look at here and here, what we can see is a lot of aggressive sellers, right? A lot of aggressive sellers here, a lot of aggressive sellers here. And we see that simply from the red delta, right? If it was blue delta, so if it was like this, in this particular candle, there were more aggressive buyers. But we are interested in the bottom of the zone because this is where the rejection actually happened, right? So look at what was going on here and here. Let's just make this a little bit clearer. This here is how you trade the orb with a lot of efficiency and actual clarity. This is how you do it. So yes, we broke below, but we also want to use this in conjunction with our levels, right? If we can break below here and break below here, how does the market react when we break and retest? So this is what the break and retest model looks like. We want to use the opening range breakout at key levels in conjunction with break and retest with order flow, right? So that was a mouthful, so let me break that down. So you want to define your key level. This is the first thing, right? You want to define your key level. After you define your key level, you want to have an entry into the key level, right? Into the key level. And this is where you start marking up your orb. And the last thing you look for, after you've had your entry into the key level, after you've had your orb, the last thing you're looking for is an absorption. So who is being absorbed, right? Who is being absorbed? So in other words, where is a delta high and where was that delta not rewarded? Because on 2 occasions here, we couldn't break below the zone here and here. We only wicked below the zones here and here, and we actually had subsequent higher breaks on 2 occasions, right? So on 1 occasion and on 2 occasions, right? On 2 separate occasions, we broke above the level. So these sellers over here failed, right? These sellers over here failed, right? This is how the orb works. This is how order flow works. So if you're confused about entries, it's because you're truly, in my opinion, missing what's going on here. And also what's going on here. It's the same sort of thing. So again, define your key level, right? Wait for price to hit your key level and then understand absorption. And this does take practice. Order flow is not something you're going to learn overnight. It's not something you're going to learn from just watching this one video or all the other videos I made on order flow. You actually have to practice this stuff, right? So here's now where the entry became interesting. So my entry that day for ES was, again, 67.50, right? 67.50. So 67.50, right? So stops just below here. Again, if we just take a look at this from a basic, I don't really use that many ICT concepts, but this for those who are wondering, this is an FVG or a fair value gap on the 1 minute time frame. Now, I don't use fair value gaps. Well, I kind of do, right? I keep them as safe places to keep my stops, but realistically, fair value gaps don't mean anything unless you understand the the absorption. Unless you truly understand what's going on, fair value gaps are a waste of your time. So you want to try and understand what's going on here, here, and here, right? You want to see what was going on, because this is a true break and retest model, right? What we saw was we saw break, we saw retest, and then we went long. So it's a 3-step model, right? Ladies and gentlemen, it's a 3-step model. We have break, retest, entry. So break, retest, and then entry, right? BRE, break, retest, entry, right? Never, ever, ever get this wrong, right? Lower time frame, if your lower time frame executions are messing up, it's just because you don't understand one or more or all of these things, right? So you're not waiting for, this is a common mistake I see, you're not waiting for the high or the low to be broken. No, you're using that as a confluence. You want to see the price action as you are breaking, right? As you are breaking, right? With key levels, super important. So shift your mindset towards looking at candles and breaks to looking at levels and absorption, right? Your trading will become much easier and more fun in the process. So again, once again, I think I broke this down. Let's see. There we go. So here was a couple of things from the setup, right? So the setup looked like this. Here we go. I'm just sending this to one of my students as well. So if I break this down, there we go. So this here was, again, I took 2 setups this day, right? I actually took 2 separate setups. So my first setup was, I actually had my TP at the top of this level, right? And what was interesting here, if we just take, again, a lesson about levels, right? Key level 1 was acting as a huge supply, right? So I wanted price to fill this fair value gap. However, we were rejecting, right? So understand where your levels are, right? Key level 1, so if you're trading ES, key level 1, 80 to about 90, 91. This was a huge area of supply. So we went from demand to supply. So understand, right? Understand where your levels are. That's very important. But once you understand where your levels are, you can start to then, you know where to target. So I should have targeted here. I decided to hold it up to the weekly opening price, which was, just a bit unlucky. We never got there. So again, broke even on this trade here. So as price came in, I went break even, then I decided to go long again. So I want to break down the second long. So the second long was a little bit cleaner, in my opinion, than the first long, right? So I went long again at 52, right? So that's going to be here, 67.52 or 53 area. So now we want to break down how this formed, right? What made me go long the second time? So that is here, right? So let's break this down. So the second long looked something like this, right? So we tap into this area. This is going to be a lesson on support and resistance, I guess, but mainly support. So if you're an ES trader, I want you to go to 67.45. I'll mark this up on your charts. Go and back test this level, 67.45, right? 67.45, right? Just here, 67.45. But I'm going to put it in big. Put in big writing, right? 67.45. What you can see here is the entry here, and then the initial re-entry over here. So this was at 17 past 10, and this was at 53 past 10. And this was a very fast-moving trade up to this resistance area. So again, the entry came at 52, or 52.75 it was. Stops now, I was comfortable to have them ideally at the same place, but I had them kind of trailed here. And I was targeting this zone, which unfortunately never got hit, right? We never seem to have hit that zone, which is quite frustrating, but it's one of those things. So now we want to understand what made me go long here. And it was the same thing. This is support, right? This is how support forms, right? We had a support zone over here. So for those who can understand, this was my entry, right? What's going on here? What can you see? So we have a green candle. So candles themselves don't mean anything. Patterns themselves don't mean anything, right? None of these concepts you use mean anything, right? It only depends on the context inside the candles or the order flow inside the candles more specifically. So if this is the candle that we're dealing with, right? We're dealing with this candle, right? What was going on here? So what we can see here again is red delta, right? 87 for 2, 204 for 144. We see a lot of aggressive selling, but the market breaks higher, right? Aggressive selling, what I've circled, but the market breaks higher. That's the image you see over here. So if you look at ES, for example, 67.45, what was going on? Massive seller absorption, right? Here, sellers were absorbed. Sellers were absorbed, right? Because if we're breaking above the key level here, right? If we're breaking above the key level like this, or like this, you need to understand that sellers did not win because they would have driven price below the zone, right? We broke above the zone. So you got to understand sellers were absorbed, sellers were unsuccessful, right? This is what you want to understand. Sellers were unsuccessful in their attempt to break the markets higher, right? And that is the reason we went lower, right? So 67.40 ES traders, go back test that. Right, go and back test that. Right, you need to specifically go and back test that. And so that is how sort of the Friday went. It wasn't great price action overall. I was happy with the trades. My execution, my management could have been a little bit better, right? Because the market kept rejecting just before my target. So it's one of those things. So holding a trade like this, for traders who have tried to hold, holding trades like this is quite a difficult thing. Nobody wants to be in trades that look like this, right? You want to enter here, you want to exit here, 17-minute trade, you're done with your day, right? But the markets are not always like that, right? The markets are choppy, right? They can be choppy, right? So again, the theory that I had upon reflection, if you think about the way that I was trying to trade, something I mentioned earlier on, I wanted price to go all the way up here because the weekly opening price was here. So another thing you can go and back test, right? Go and back test the weekly opening price. The markets go long below the weekly opening price, typically on Friday after a bearish week, right? ES, NQ, even the Forex markets, go and back test this, right? One of the most fundamental things you can do as a trader is understanding the weekly opening price, right? As well as the absorption. But yeah, that's what I wanted to go through on Friday. That was sort of the trades that I was looking at. And I'm glad I got out when I did because the markets continue to dump, bearish. These two trades would have eventually ended in the red, right? If I didn't get out. So again, it's important to understand I trade from 9:30 to about 11 Eastern. So I'm typically done by 11 Eastern, which is here. So I only trade this window. I'm not interested in all this. It's typically mega chop, right? I'm not interested in any of this. I just want to catch one or two good moves from level 1 to level 2 to level 3, right? In line with the weekly opening price. That is the only thing I'm interested in, right? So the way that I do that is through obviously the 3-step process, which I highlight through the Discord as well. So you're looking primarily at footprint charts to make any decision when you trade on those lower time frames.